actually a bit skeptical that what we've seen is the start of a new super cycle. We think there are quite clear parallels with the sort of stimulus-induced price rises that we saw after the global financial crisis, when China launched that massive stimulus program and sent metals prices soaring. And we think that what we've seen over the last year, again, has been fueled by Chinese stimulus. And that as that starts to be withdrawn, and we can already see it being withdrawn, credit is tightening, credit growth is slowing, and we think in the second half of the year that will act as a dampener on metals prices. That's not to say that we don't think that there is the potential for a metal super cycle, but we think the timing is not right now. That over the next couple of years, our China economist thinks that the economy will be slowing quite sharply, and that we think will be offset any positives coming from a faster rollout of green energy and just a more general move towards a greener economy.
I think we've seen quite a lot of price divergence within the industrial metals even this year, albeit within the broader sort of like China cycle. I don't discount the possibility for one or two of them, which are particularly constrained on the supply side, to record higher prices before the end of the year. Tin would be an obvious one, but I'll defer to James later for his comments on that. In terms of the super cycle, yes, but with the emphasis on the word cycle. You know, following up what Caroline said, I mean, if we kind of drill down to what we're expecting to be the driver of a super cycle, take, for example, energy transition, right? A lot of the impetus is going to come from government spending, yeah? Then you look at the European Union, it is only now at the stage of approving individual nation members' plans for their investment. It would be unrealistic to expect, you know, sort of real traction on demand right now, given that we're still at the planning stage in many of these the initiatives, and the US is behind the European Union from that point of view. So we may only be in the foothills of what we may come to know as a super cycle.
But you know, from my experience watching all these spikes, they usually tend to be short-lived because there's always a reaction either from the supply side or from a substitution impact or from outright demand destruction. So we've seen it most clearly in nickel 2004, 5, 6, 7, when we got to $50,000. A whole industry was born with pig iron as a substitute, and you know, I just think it's difficult to underestimate the technological innovation that comes about if prices get too high. So that's one note of caution. Whether we've seen the highs, I think we probably have seen the highs. I don't think any of us thought we would get to these levels at the beginning of the year anyway.
For this year, we're either at the peak or approaching the peak for tin prices. I definitely agree with Ed that, you know, we will see a shift of spending to travel and entertainment away from consumer electronics appliances that people have been really stocking up on at home, and those are quite tin intensive. You know, as the money shifts away, I suspect demand will drop off, and then we're likely to have supply coming back online as the impact of COVID drops off in the Asian countries like Malaysia, Indonesia. So I think the market will move back towards balance later this year, and prices likely cooling with that. In terms of whether in a super cycle for tin, you know, we're quite bullish on our demand forecasts over the next decade or so. I think there's a lot of factors now which are, you know, pretty helpful to tin use growth. And, you know, I think Andy touched on the fact that there's a lot of planning going into new infrastructure and things like that.
Cycle. In the early noughties, a super cycle was a major secular demand event combined with supply tightness. And I tend to define a super cycle as an event which sees metals demand double or treble from its beginning levels. And I don't think we see that in all of the base and industrial metals, but we do see it in the battery materials. So based on our demand forecast, we expect demand for some of these battery materials to go up 15 or 20 times of the current market size over the next 10 years. And I think that does constitute a super cycle. But I think basically you're looking at a very differentiated super cycle. Demand for materials that are leveraged to the energy transition, like copper, battery materials, potentially steel, could be very strong. Whereas demand for materials that are less exposed to that transition, that are more exposed to normal cycles, could be weak. So I think you're looking at a very differentiated event.
You know, the world of batteries has moved from it needed regulations to prosper to it's just a better product. And so, you know, battery demand is going to be spectacular. I think the mining companies don't get it yet, to tell you the truth. I think there's always this, you know, nickel, oh, Indonesia's going to fill it. Indonesia's not going to fill it. However, what Ed said is true. The cure for high prices is high prices, and we've already seen that in cobalt. So, you know, in terms of, are we in a super cycle? I believe we're in a super cycle for battery technology, but the metals demanded may constantly shift. So we may see, you know, a pretty strong move in the price of nickel, but then battery chemistries can change. They can change to manganese, they can change to other different areas. So I think battery technology is in a super cycle. I think which metals you decide on can constantly shift. And so, you know, the worst thing I think for any of these battery metals is the price to get too high, because you've already seen it from the automotive makers. They're very willing to switch out of your metal if it's not there. But on the flip side, I think the mining industry has been very slow to react to providing these metals. I think they're finally starting to understand that now.